Well, good morning and happy Sunday, everybody. I hope your church service is going well. In this live stream, we're going to do something new and exciting where I grift you and I, in return, just grift you. No, but in all seriousness, we got a new concept here where if you super chat me $10, you send me as $10 super chat. I will go over whatever stock you want me to cover. Okay. You are compensating me for guessing the future of a stock that is unpredictable. And we're just going to hang out. So we'll hang out, we'll talk, we'll chat, we'll have a good time. And then if you want me to look into your favorite stunk, we will do that. I'll pull up the financial statements, I'll pull up stock analysis, and I'll give you my honest thoughts about your crappy little company that you want me to analyze because I got nothing else to do. This is a very lazy weekend for me, man. You know what I'm doing? You know what I'm doing this weekend? Nothing. Okay? Absolutely nothing but chilling like a villain. Okay? I should probably go clean up downstairs. Every time I have my kids over, the house gets freaking. House gets messy, but that's what you do when you have kids. All right, let's do some comments. Like I said, you send me $10, you super chat me $10, I will cover your stock live like a Chad. Just a dude. Is this thumbnail your Tinder main pick? Well, first of all, let me inform you that Tinder is absolute hot, worthless trash full of scams and bots. It's a horrible app. If you want to actually date, the best app to use is Hinge. If you want to pay for an app, the only app that you should potentially pay for is Hinge. Tinder is garbage, scum, it's filth. And no, that is not my main pick. My main pick is me and a dog. Oh, he's got a doggo. I got to swipe. All right. Somebody says I'm balding. I'm balding, guys. Look. I'm balding. I'm so bald. Oh, my shirt's blue. My hair is blonde. I'm balding, bro. Yeah, I'm balding. Hello, Strongman. What's up, Greystone? How's it going? Man, we got 29 people already on a Sunday morning. You people need to get lives. Losers. Is that Elon Musk's house? This is not Elon Musk's house. Elon Musk has a full repertoire of Optimus slimes that service him in a variety of different ways, both in the bedroom and around the house. Okay. Actually, doesn't Elon Musk live in like this really tiny house? He's kind of like me in that sense where I don't really care that much about material possessions. I don't really care. Like, I don't need a big house. I don't need an expensive car. That doesn't satisfy me. I'm more focused on like doing things. I think he's kind of similar to me in that regard. I think he lives in like a tiny home. And I think for a while, we'll see just like sleeping on people's couches. Hey, at least he's not consumerist. At least he's not a consumerist that I can see. I hate consumerists. They make me sick. There's nothing more pitiful than an American consumerist. Woo! Oh, we already got a super chat. It's working. It's working. All right. Well, we got our first request here. All right. Let me do these 2 member comments and then we'll cover your stock, good sir. He could sell 10 VT shares and get a transplant. I could, if I actually was going bald, I would 100% get hair implants. Okay. Because I've realized that you have to have hair and be hot or women aren't going to like you. Okay. Oh, it's about your personality, bro. No, be hot. Good turkey. Nothing better than waking up to the sound. Of course. What's better than listening to me? I can't imagine you watching anybody else but me. All right, we got our first super chat here from Hoy for $10. Tudor gold ticker, TDRRF. All right, let me see if I can pull this up. Let me get this ready, and then we'll go ahead and look at it. I doubt it's on stock and now. It's TDRRF. Oh, is it? It is? Wow. Okay. And then let me pull it up on Google. Tudor Gold Stock Investor Relations. Tudor Gold. All right, I guess we can go ahead and dive in. So, right off the bat, my warning signs are flashing here. Okay. I'm not a fan of these like gold miner companies, which I'm assuming this is, because a lot of the times what they are is they're companies that want to do exploration or they think they found gold in the ground and they need capital to find the gold, to actually identify it, and then to eventually pull it out of the ground. So what happens is these small gold companies, they'll list on an exchange and then they will pay an influencer or some kind of advertising firm to promote the stock. So retail buys into the stock. That elevates the price and then they can issue shares so they can capitalize their business so they can have money to do what they need to do for their business. And a lot of the time it's very speculative. Okay, that's my understanding of most gold stocks. So a lot of the times you're going to lose money. And being perfectly transparent here, there's this one grifter on YouTube, uh, alpha status stocks. They were showing this gold stock, and I'm like, I know it's a scam, but I'm going to see if these clowns can pump it. So I put some money in it, and it went down like 90%. So yes, I know I'm a horrible investor, but that was a pure speculative play. All right, well, going back, this stock has been publicly traded since 2020. So they got listed. Oh, actually, let's go max. Okay. Yep. I can already see what happened here. So the stock was publicly traded since 2017. You know, kind of just went up and down. It was a penny stock. And then the clown market happened. And I have a suspicion they may have done some advertising here, some kind of influencer sponsorship potentially. The stock rockets. They issue a bunch of shares. I'd be shocked if they didn't right around here. And then basically they've kind of been living off that share issuance ever since. Okay. And then most recently, I'm seeing a little pump in the past month. That's interesting. Interesting stuff there. Is somebody pumping this stock on YouTube that I'm not aware of? Whenever I see a pump, that's usually it. I mean, it doesn't guarantee it. It could just possibly be that we found gold. It's right here. So the stock goes up. That's possible. But it could also be that an influencer's pumping it. So if you heard this on an influencer's channel, you need to be very careful. So we see a little rally in the stock. Tudor Gold Corp engages in the exploration and development of mineral properties in Canada. The company primarily explores gold, copper, silver, and other precious and base metals. Its flagship project is the Treaty Creek property, covering approximately an area of, it was founded in 2015, blah, 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 blah. Okay, so this is exactly what I predicted it was going to be. All right, let's do some revenue analysis. So the first thing I see is that there's no revenue. Okay, they're just exploring. That's all they're doing. There's no revenue. This company doesn't generate any revenue. Okay, this is highly speculative. So with a company like this, you got to look, is this company going to survive for a while? And they survive by generating as much cash from investors as they possibly can just to keep them afloat. It's kind of like a Hyliion-esque kind of thing. And it's insanely speculative. So they have no revenue. Operating income, they're losing about $1 million a quarter, sometimes more. Roughly $1 million a quarter, maybe $1.5 million if you average it out. Let's see. They got a little bit of interest, nothing crazy. Let's see. And shares. Okay, obviously they've been issuing lots and lots and lots of shares because that's the only way they survive. So if you buy this stock, and look at that. They just had another share issuance. Interesting. I wonder if they pumped the stock on some influencer's channel. I would not be surprised. So they're just issuing shares. So if you buy shares down here, right, your ownership is slowly going to be diluted because the only way this company survive is via investor capitalization. All right, let's go look at their balance sheet. All right, as of June 30th, 2025. So they have hold on a minute. They were about to go bankrupt. Holy crap. Oh my God. They were about to go bankrupt. Look at this. So in Q4 of 2025, they had $370,000 of cash in short-term investments. I, Christopher Bell, have more money than that as an individual living in a townhome. This business had $370,000. Is this in Canadian dollars? Yeah. 370,000 Canadian dollars as of Q4 2025. And then they had this massive dilution event where they raised roughly $12 million. Okay. So I'm not saying they did this, but I suspect it's possible they could have just shilled this on YouTube. So I don't know where you heard this from, but this company is not producing any revenue. All right. Property, plant, equipment is going up. Let's see. Let's look at their debt. Deferred tax liabilities. Interesting. A deferred tax liability is taxes that you think you're going to pay in the future, which that can fluctuate based on changes in tax law. Okay, long-term unearned revenue. Okay, so what this indicates to me is if they have long-term unearned revenue, that means they received cash. They've been capitalized by some kind of vendor or paid by some kind of vendor, excuse me, for probably extracting the gold. Okay, so it looks like they maybe potentially signed some kind of contract recently. So this could potentially be turning around into a business that could potentially become profitable. Maybe. I'm not saying that's the case, but it's possible. That's what that indicates to me. We can go look at the website in a second. All right. Operating cash flow. So they're burning about $700,000 on average per quarter. Okay. So with this most recent, at least from operations. So just from looking at their balance sheet, it's going to be hard for this company to go bankrupt for a while. It's going to be a while because of that most recent capitalization event. But the price you pay for your company not going to zero is massive dilution. Okay. Bro, it's got a price of books of 2.56. It's cheap, bro. Yeah, it's not going to go bankrupt in a while. Okay. Tudor Gold. TUD. Is that the ticker? TUD. What's up, TUD? Why invest? Large gold resource. The Gold Storm. Oh, that's like a German name. The Goldsturm deposit represents one of the largest gold discoveries in the past 30 years. Management, proven track record of past discoveries and developed successful producing mines. In addition to gold, significant amount of copper and silver. Equity ownership is 44% insider held, which includes Eric Sprott. Okay. What's your plan to make money? I wonder if somebody shilled this stock. I would not be surprised at all. All right. Let's look at if there's any news. Tudor Gold intersects 2.5 GT gold equivalent over. Tudor closes acquisition of American Creek. What's this? Okay, they completed the acquisition of American Creek Resources to increase interest to 80% of the Treaty Creek project located in the Golden Triangle in Northwest British Columbia. All right. They paid $1 million in severance payments and issued almost 2 million shares in the capital of Tudor at a per share price of 53 cents. Okay, so they made an acquisition of like a new area. Bullish, bro. Underground exploration permit. Acquire. Okay. I mean, this is highly speculative investment. That's all I can say. They're not generating revenue. It's a typical penny stock gold company that could just be a massive dilution disaster and potentially never realize anything. So over time, you're taking a huge risk. This is like a gamble. This is not all in money type of stuff. This is not all in money. Don't be a freaking clown. Okay. So overall, I'm not personally a fan of that one, to be perfectly honest. Okay. All right. Hopefully that was sufficient. I think that was. Holy crap. This is working. I'm getting super chat. Whoa, I'm rich, baby. All right. We got Vallejo SA, a French company. Let me do a couple member comments and then we'll do that. Just wear a top hat to hide the baldness. Yeah, I'm sure that would look good. I recommend the money gold with Matthew McConaughey. What? All right. Vallejo SA, French company. Yes, I am the French. All right, let me pull this up. Vallejo SA. I found a Vallejo SE. Let me see if I can pull it up on the actual Vallejo SA stock. Is it Vallejo SE? Vallejo SA. Is there a ticker? What's the ticker of this company? All right, well, we'll come back to that. I'll let you post in the comments, and then we're not going to forget it. But let's just move on to this one real quick, and then we'll circle back. Just post the ticker of the company, because when I looked, it was Vallejo SE, not SA. All right, VBIAX. Isn't that a bond fund? What is that? VBIAX. Balanced Index Fund. Okay. All right. So let me go ahead and close that, and then we'll share the screen, and then we'll go look at the Vanguard Balanced Fund Index Fund Admiral share. So I'm not personally opposed to balanced funds, okay? The theory behind having bonds and stocks in a portfolio is that they're supposed to be inversely correlated. So if you think about it, let's say bond yields are 4%. And suddenly we have this recession. Something crazy happens in the world. So if you have a stock portfolio, part of your portfolio, and a bond part of your portfolio, the stock part might drop massively because of whatever's happening in the world. And then you have a flight to safety to treasuries, which pushes up the price of the bonds because there's more buying pressure, which drops the yields, but it pushes up the price. So what you have is you have stocks going down, but your bonds going up. And then theoretically, you can reallocate your portfolio. So you're kind of like selling bonds as they go up and buying stocks as they go down. That's like the theoretical underpinning of it. So unfortunately, in 2021, we had like a worst case scenario where yields on bonds were basically zero. So there was only one way to go. It was down. There was no, like, where else? Either you're going to stay flat or you're going to go down. Bonds were, in my opinion, they were almost useless. And especially longer duration bonds were totally useless, in my opinion, because you weren't getting any yield and you had massive downside if rates went up. So you could see what happened. So when rates were really low during the cloud market, TLT, it went up massively. Here's TLT. These are like long-term treasuries. So TLT went up massively all the way through April of 2020. And then you see an utter collapse in long-term bonds because rates went up. Interest rates went up. So there was inflation, stocks went down, and bonds went down. So people were kind of questioning the 60-40 portfolio. Now it's potentially slightly more feasible because at least bonds are actually paying an interest rate. And at least we could potentially have rate cuts. Bonds could actually have some kind of capital gains. Where before, when rates were zero, I don't know how that's possible. Okay. So, but that's the risk of bonds is interest rate fluctuations. So this is a balanced fund. It's a Vanguard fund, very low expense ratio. That's good. The yield's fine. Honestly, the yield's irrelevant. If you're retired and you're living off of this, basically how you do it is if you need to decumulate from your portfolio, I would take the dividend because you're paying tax on it anyway. And then you could sell an additional X percentage to fund your lifestyle needs. Because remember, the price of the investment drops by the amount of the dividend. So You're basically forced accumulating unless you reinvest it, and you got to pay tax on it. So it really is a forced accumulation. But this is not the worst thing in the world. I mean, that's a fine yield. I mean, you can't live off that yield unless you have a lot of money, but it's not bad. Minimum investment 3,000. Vanguard still has that old school stuff. Okay. So let's see. The index fund offers investors an easy, low-cost way to gain exposure to stocks and bonds. The fund invests roughly 60% in stocks and 40% in bonds, tracked by two indexes that represent broad barometers for the U.S. equity and U.S. taxable markets. All right, so if you look at the historical returns, they've been very solid. Now, you might laugh and say, oh, those returns are trash. Bro, those returns are trash. Large cap tech, bro. 9.23% compounded over 10 years is pretty freaking good. Okay? That's extremely good. And even if you consider the bond bear market, they're doing pretty good. Over the past 3 years or 5 years, it's up 8.21. 3 years is up 12.55, and 1 year 11.16. I mean, overall, I have nothing bad to say about this. I personally will not invest in this, which we'll get to in a second. Okay, so as we can see, it's got an equity component and it's got a bond component. So the equity, they got about 3,000 stocks in there with a median market cap of 219 billion. So it's probably a total market ETF with an earnings growth rate of 22%. Foreign holdings. Is it just a US only? I think this is US only. Yeah, let's look at the prospectus. I'm pretty sure. Okay, weighted 60% Dow Jones US total stock market and 40% Lehman Brothers US. Okay, so this is entirely US. Okay, so I'm actually liking this a lot less. So, first of all, I shill for VT. I think you should have total world exposure in your stock portfolio. When it comes to bonds, maybe not, because bonds are there for stability, in my humble opinion. That's what they're there for. They're not there to like make insane returns. You purchase treasuries so you don't have massive fluctuations in your portfolio. So if you're decumulating from your portfolio, you don't have to worry about a stock market crash. That's why I have money in short-term treasuries right now, because it's not about the returns. It's about stability. The money will be there. Okay. It's basically risk-free, except for interest rate, like reinvestment risk, basically. But so bonds, I'm not necessarily opposed to just having US only, because currency fluctuations can wreck bonds. Like if you own international bonds and you see massive discrepancies in currency, you can actually see a significant drop in the value. So it kind of defeats the purpose, in my opinion, because the purpose of bonds is stability. But if you have exposure to foreign currencies, you can see massive fluctuations, which you don't want. So if you live in America and you live in dollars, the dollar is your life, you probably just want short-term treasuries if you want stability, if that's your goal. But when it comes to stocks, I disagree. I think you should have total world exposure. This is just US only. So it's not the worst thing in the world, but you're concentrated in literally one country. Literally one country. Which could potentially drag down total returns in the future. You don't know. So it's a US only. It's had decent returns. The only other thing I don't like about this is I like keeping my investments separate when it comes to bonds and stocks. Because when you sell a share of this, every time you sell a share of this, you're selling 60% of your sale is stock and the rest is bonds. So you're selling both stocks and bonds to take money out of this if you need it. If I have a treasury ETF or a mutual fund and a stock ETF or mutual fund, and I just wanted to accumulate from my treasuries, I can do that. I have that choice. Whereas with this, you're selling all of it at once. So overall, I'm not going to crap on this too much. I mean, I disagree with the US only. And, let's see what is the duration of the bonds. Let's see what the fixed income says. Duration 5.8 years. So basically what duration means is for every 1% change in rates, that's kind of the expected move you could expect. So these aren't short-term bonds. These are longer-term bonds, which I personally am not a fan of. I'm not a fan of because they're volatile. They can be extremely volatile based on rates. So you're going to see roughly a 6% move one way or the other for every 1% change in interest rates. So if we keep cutting rates and yields come down, yeah, the bonds portion is going to do decently well, but it's almost like capped on the upside because eventually bonds can't just go up forever. I mean, theoretically, if people kept buying them, and they had negative yields, but theoretically, the bond has a coupon. It pays the coupon, and that's what you're going to get. So if we have rates going down and then the bonds start to go up, I mean, they're going to be capped at a certain point. So your upside is kind of limited with bonds, and then you're just living off the interest. So this thing could be volatile. Okay, these are not short-term treasury. This is probably like an intermediate term treasury ETF. It's not the worst. I mean, you could get some upside if rates come down, but if rates go up, you could also get some downside too. Whereas with treasuries, short-term treasuries like VUSXX, you don't have to worry about that. So personally, I'm not going to say this is bad. If you like U.S. stocks, bro, it's not the worst thing in the world. I don't like the longer duration of the bonds. I disagree with that. And but overall, like if I had parents are like, oh, hey, should I buy this or that? What should I buy? I'd be like, Target Retirement Fund, or maybe this. Okay, so not the worst thing in the world, but just understand that you're concentrated in one country and you have longer duration bonds, which are not as safe as you might think. They can be volatile. I bet this thing got wrecked during the clown market when the bubble popped. But yeah, not the worst thing in the world. I'm not going to crap on it too much. All right, so that's that. All right, did that guy tell me what the company was? Vallejo SA. Okay, it's DNAP. Gold is a bubble. Vallejo SE. Okay, he's okay. I would have felt bad if he left the live stream. All right. Vallejo SE. Vallejo SE stock. What is this? Is this on stock analysis? Am I sharing my screen? Yes, I am. Okay. Vallejo SE. All right, what is this? Vallejo SE, a technology company, designs, produces, and sells products and systems for the automotive markets in France, Africa, North America, South America. How's tariffs treating this one? It operates through three segments: power, brain, and light. The power segment offers automotive thermal systems, including EV cooling systems. Okay, so it's basically like an auto parts supplier, some kind of like auto company. All right, let's go look at the financials. Let's go look at the stock first. So the stock has been absolutely cooked over the past 5 years. Absolutely cooked over the past 5 years. And then over this maximum time, it's basically made no money from a stock price perspective, but it's done well. I mean, has a dividend. So the total returns are higher than negative 11%. Okay, it had a huge rally back in 2017. Basically, it rallied from 2012 to 2017. And then it's basically collapsed ever since then. All right, let's see what the financials are doing. Oh, they got the European semi-annual. I'll tell you what, it is a freaking pain to... I hate international financial statements. Such a pain. All right, revenue. Basically flat if you factor in inflation. I mean, they had some revenue growth in 2022, but overall, I mean, revenue is pretty stagnant, or it's even declining a little bit. Let's look at margins. Where is it at? Am I blind? Operating margin. Where's gross margin? Well, okay, they don't have the growth. They have the gross profit. So the gross margin's roughly 20%, it looks like. So not super profitable. The operating margin, 4%, very unprofitable, or it's profitable, but it's a barely profitable business. And then insanely low profit margins. So with a business like this, I mean, obviously it has value because it makes money, but the margins are razor thin. So any bad scenario will make this company lose money. Okay. Or any kind of new competition that comes in could potentially cook a company like this. So very low margins. Free cash flow margin is a little bit better. So they have some non-cash expenses that are weighing it down. I guess we'll go look at that in a second. So not the most profitable thing in the world. They got 2.4 billion euros in cash, 8.1 billion of current assets, and current liabilities of 10 billion. Ugh. Yeah, they definitely run a tight cash situation there. Let's look at the ratios. Where's the quick ratio? They don't have the quick ratio? What is this? All right, I was trying to look at their quick ratio, but I don't know where it is on here. All right, let's go back to the balance sheet. Okay, so they have 8 million of current assets and 10 million of current debt. So from a liquidity standpoint, not the best. Long-term assets are actually mostly intangible assets. So they have 6.2 billion euros of intangible assets and then 5 billion of property, roughly 5 billion of property, plant, and equipment versus long-term debt of 4 billion. So their long-term assets versus liabilities are not the worst, but they run kind of a tight ship for liquidity. So obviously, I don't think there's going to be imminent bankruptcy. They're cash flow positive, and they have positive operating, and they have a decent amount of cash on the balance sheet. But I'm not liking this business that much because the margins are so freaking thin. All right, let's look at operating cash flow. So they have been able to increase operating cash flow a little bit over the years, but nothing spectacular there. There could have been like a one-off scenario or event that happened in like 2023 because the operating cash flow seems to be normalizing. And I don't think it's beating inflation. Let's see, what are they doing? Purchasing intangible assets, divestitures. Okay, apparently they sold something for 185 million euros in the first half of 2024. Any acquisitions? They made a 352 million euro acquisition in December 31st, 2022. Capital expenditures. What are they doing with debt? All right, they're packing on debt. They're actually packing on a decent amount of debt. They packed on 858 million in June of 2024 in that first half of the year. And then in the first half of this year, they packed on an additional 743. And what were they doing with it? Why are they packing on debt? Maybe they refinanced debt. That's possible. Yeah, because they you can see they paid off a bunch of debt and then they issued debt. So the net debt actually went down. Okay, so they probably just refinanced some debt is what that is. All right. Let's see. They're paying dividends, they're growing, but that's irrelevant. Interesting. Let's go look at the website. Yeah, this stock has not done well. Valeo SE websites. Smart technology for smart mobility. What is this? Do I have to accept cookies? Okay. Innovation and smart Oh, they're in China. Oh my God. They manufacture in China. Oh. Yeah, this company could get embroiled in a trade war. I can tell you that. All right. So I guess they make their stuff in China. That's interesting. At the heart of the mobility revolutions, bro. Let's go look at their results. All right. In the first half, Vallejo continued to improve its profitability with an operating margin. Wow, that's very profitable, bro. Let's see. Trying to see if they mentioned any big news. All right, they're trying to do cost-cutting measures because they should, because they barely make any freaking money. Let's see. See, Vallejo at the heart of tomorrow's mobility. How are they changing the world? Vallejo will participate in the International Motor Show in Germany. The group will showcase its cutting-edge solutions, which are set to shape the future of mobility. What are they doing? Vallejo is uniquely positioned to support the transformation of the automotive industry thanks to its combined expertise in hardware and software and its ability to deliver scalable, high-performance solutions in both ADAS, electrification, interior experience, and lighting. All right, they provide a full range of technologies from 48V systems to high-voltage e-motors, power electronics, transmission for both battery electric vehicles and hybrids. And they are transforming the vehicle interior to a more personalized and intelligent space, from thermal comfort systems, which you have to pay a subscription for, to ambient lighting. Okay, so I mean, this thing just basically follows the freaking auto industry. Okay, they provide hardware, software for cars. I mean, it's barely profitable. So unless they're coming up with some revolutionary technology, I don't know how this stock is going to go ballistic. Okay, this is not a growth stock. This is more of a value stock. Okay, and me personally, I'd rather buy a total market index owning lots of tech companies and basically everything instead of potentially risking a lot of money on this. So I don't know what the bull case is unless they're somehow crushing the competition or can massively fix margins going into the future. So that's what I think about that. I'm not super impressed with that company, to be perfectly honest. It's kind of yawn-inducing. All right, so that was Vallejo, VBIAX, SPGM, VT with higher requirements, I think. All right, Spoogum. Let's go. Let me pull that up, and then we'll share my screen. SPGM. What the hell is this? All right, let's look at this ETF. What's old Spoogum doing? All right, so we got Spoogum, Spider Portfolio MSCI Global Stock Market ETF. Oh, is this a VT? What is this? What is this? A gross expense ratio of 0.09. That's pretty low. That's shocking. I've seen other ETFs that have that are like kind of VT-esque, like they're globally diversified. The main one I saw was Earth, URTH. And the expense ratio was a little high for that. VT has a 0.07% expense ratio. This is roughly equivalent. So I can't really knock the expense ratio on this. Let's look at the fact sheet. Okay, they seek to provide investment results that correspond generally to the total return performance of the MSCI ACWI IMI index. Let's see. Could potentially mitigate country-specific risk. No crap. All right. So the index is a free float adjusted market capitalization weighted index that is designed to measure the combined equity market performance of developing and emerging markets. Okay. So it seems to have everything. The index covers 99% of the global equity investment opportunity set. This looks like a competitor to VT. I'm not joking. Okay. What are they doing here? There's got to be something up with this. Okay, let's see. Okay, so they have the US, China, Japan, UK, Canada. Okay, so yeah, it's very similar to VT. I wonder if they're like, how many stocks is in this? Number of holdings, 2,768. Okay, so basically VT has a lot of stocks. I think it has like, let me go look. VT ETF. How many holdings does VT have? VT has 10,000 stocks. Okay. This one has 2,768. But if they're investing in 99% of the global equity investment opportunity set, you're not going to see that much of a difference. Okay. Let's see. How have I never heard of this? This is interesting. This is basically like VT. Let's go look at the prospectus a little bit more. Let's look at the summary prospectus. Very low fees. Turnover 4%. That's very low turnover. Employs a sampling strategy, which means the fund is not required to purchase all the securities. Okay, so VT is more of like legit Boglehead buy everything, bro. This one does kind of a sampling strategy where they only buy certain stocks, as we can see, because it only has 2,700 that approximates the index. The fund may purchase a subset of securities in the index. Okay. Let's see. %99 of global equity markets. To be eligible for inclusion, a security its issuing company must meet certain size and capitalization requirements. The company must have a full market cap within the range of the top 99% of the developed market equity universe. Okay, so they're basically excluding, looks like, clownish penny stocks around the world. Yeah, honestly, I can't knock this too much. I mean, I've chosen VT, but you're going to get, I think you're going to get roughly equivalent returns from this. You're going to get roughly equivalent returns from this. Yeah, I don't see anything wrong with this. I didn't even know this freaking existed. This is cool. This would be a tax loss harvesting opportunity for VT. I might actually potentially purchase this. Let's see. Total return comparison. All right, let's see if we can plug this in. Nominal dollars, total return, because that's all that matters. All right, SPGM. And then VT. $20, it's outperformed VT. Everything outperforms VT. All right, let's see. We'll go back 5 years. So 2020. Is it month, day to today? Oh, look at that. It tracks VT perfectly. It's done slightly better. So if you had bought the clownish VT, you'd have a total return in the past 5 years of 84.5%. And with Spoogum, you'd have a total return of 87.3%. But, I mean, they're roughly approximating each other. This is the perfect tax loss harvest opportunity. Wow. How did I not know this existed? How did you find this? This is interesting. Okay. So, personally, I'm going to stick with VT. I've already chosen VT. It's whatever. Okay. Total market, 9,000 stocks, whatever. This is a perfectly acceptable replacement. And this is also a tax loss harvesting opportunity. Because let's say you buy one share of Spoogum and one share of VT. And then the market collapses 50%. Well, you can sell the share of Spoogum and put it into VT. You use that current loss on your tax return. This is in America, at least. And you still own the same index. So this is basically, for me, I would only buy this as a tax loss harvesting opportunity because I don't think I need two ETFs that do the same freaking thing, basically. So I'm fully on board with this ETF. No issues whatsoever. This is a fantastic ETF. Okay. What's the assets under management? 1.2 billion. Yeah, VT is basically the big daddy. So you may pay a little bit more spreads buying this potentially, but this is a very, very solid ETF that I am very happy with. So I got no criticisms whatsoever of this. except for like an ideological criticism that it doesn't have all the stocks, but it's basically the same thing. Okay, so that's pretty solid. I like it. All right. Good find there, buddy. Good find. I like that. Okay. No criticisms. All right. We got Celsius. Celsius, my Celsius. Let's go check out Celsius. Man, I'm printing today. I'm printing tinnies. I need to do this like every day. All right. Celsius stock. We'll do stock. No, not StreamYard. Stock analysis. Celsius. We've covered Celsius before. So let's look at Celsius. So over the past 5 years, it's up 741%. It's basically rocketed. This is basically the new monster, bro. So Celsius provides energy drinks, and they just purchased one of their big competitors, Alani. I think they acquired them pretty recently. One of the big concerns about Celsius, and one of my main concerns about Celsius, is it's another energy drink company. I go to the gas station, right? And you know what energy drinks I buy? The one that's on sale. Like sometimes they'll have like a 2 for $4, or they'll have a 2 for $5. I'm kind of disloyal to energy drinks. I kind of just go with the cheapest ones. And sometimes I've bought Celsius because it's been on sale. Like there's been 3 for $6 or whatever. And it's not a bad energy drink, and it kind of appeals to the healthy people, to the girls. But it's just another energy drink. So you have to really figure out, like, is Celsius the true Chad of energy drinks? So they have a plan where they can take more and more market share of the energy drink market. How are they differentiated from their competitors? How are they going to grow profits into the future with all the competition? So the stock's done extremely well, though. I can't really knock that. So it sold off. It was basically dead. I pumped it in a joke video, and hey, I would have 2X'd, bro. I think that acquiring their competitor definitely helped that. Let's look at their financials. Good Lord. I wonder if that's from the acquisition. So their revenue is now $739 million. That's 83% year over year. That's got to be the acquisition. Let's look at profits. Gross margin is, they're doing pretty well. I mean, they're actually growing their gross margin. It's very profitable. Look at that. 17% operating. That's a profitable business, man. For a freaking drink, for a beverage. And profit margin of 11.58%. Free cash flow margin, pretty solid. It dipped in the most recent quarter, but that could be just because of investments. Quarterly, they got $615 million of cash, $1.3 billion of current assets, $658 million of current liabilities. So literally very low risk of bankruptcy. I would be shocked unless there was fraud. Long-term assets. Yep. So the huge spike in revenue came from the acquisition. That's a fact. Because you can see their goodwill balance went up massively. Goodwill is when you purchase a company for more than the fair value of its net assets. So how that works is, let's say you want to buy my house, and my house is worth $300,000. And you buy the house for $300,000. Well, or let's say you buy it for $320,000 because there's something special about that house. It's in a great location. You purchased the house that's worth $300,000 on the market for $320,000. So you paid more than the fair value of the asset. But you did that for a specific reason, unless you're a clown. And when it comes to a company is generally worth more than the fair value of its net assets because it has future profits. So when you see an acquisition, you're generally going to see some kind of goodwill as a plug entry. So they acquired Alani, potentially, or maybe something else. We'll go look at the website. And that's why their revenue grew. So it's, oh my God, their revenue, oh my God, they're exploding, bro. It's because of the acquisition. But funny enough, I mean, their margins haven't eroded, so the acquisition doesn't seem to be the worst thing in the world. What would be sad is if they bought a company and then their margins absolutely freaking collapsed. That would be bad, but that doesn't seem to be the case. All right, cash flow. Well, their operating cash flow definitely dipped. I wonder if it's inventory or change in account receivable. Okay. Okay, so they basically, let's see. Okay, so they basically accrued a bunch of profits, but they haven't received the cash yet. So the reason their cash flow dipped looks like is because they earned a bunch of revenue, but they haven't received the cash yet. That seems to be the main reason. Uh, so that's not a concerning thing right there. It's just a timing issue. They spent 1.2 billion on cash acquisitions in cash. They could have done equity issuance too. Net debt issued. They issued 900 billion of debt. Okay, so the total cost of the acquisition, 1.2 billion plus whatever stock they may have given out. Oh, they're paying a dividend. That's cute. Look at that. They started paying a dividend. And they have preferred stock as well. And they're doing a little bit of share buybacks. So seems pretty solid. Let's go look at the company. Celsius. What did you do? I personally wouldn't invest in this. Me personally, because there's no differentiation. It's not like a hyper monopoly. Like if I was to buy something individually, this would be more of like a speculative play. Like, oh, it dipped massively. I'm gonna buy the dip, bro. All right, let's see. Products. Your partner in an yes. Without Celsius, you can't go to the gym, bro. Look at this corporate propaganda. Bro, just buy Celsius and yeah, you'll burn fat, bro. It accelerates your metabolism. You know what works? Getting off your butt and going to the gym. You don't need Celsius. Don't eat like garbage. All right, is there any news? Where's the news? Where's the news? I don't like this website. This website sucks. Do they not post news on the website? Let's go look at the products. Okay, so yeah, look at all these fruity freaking colors that girls like. Fantasy vibe, Arctic vibe. Oh, I've seen these too. Yeah, I got deals on these. That's why I bought them. They got little packets. Okay, I mean, they don't seem to have really changed that much, to be perfectly honest. Essentials on the go, hydration. Yeah, I mean, to be honest, with this business, it's literally just how do they differentiate themselves from competitors? Let's look at their valuation. Valuation was crazy in the clown market. Look at this. Jesus. Okay, so they got a price to cash flow. So you're paying $70 for $1 of trailing cash flow, $63 for $1 of trailing operating cash flow. Return on equity, very high. Yeah, I mean, it's a solid company. Like they're not having any issues, and they seem to have made a good acquisition that did not erode their margins. So, could this company do well? Absolutely. Would I personally put a lot of money in this? No, I don't think it differentiates itself. When it comes to stuff like this, it's hard to really figure out if it's actually going to succeed versus its competitors because it's a freaking energy drink. I mean, like me personally as a consumer, I don't care. I buy what's the cheapest. It's all the same thing. It's cold and it gives me caffeine. That's all I care about personally. Maybe there's fanatics for Celsius. Oh my God, I'm a girl. I'm going to go to the gym and I'm going to wear my tight pants and bra. But if you look at me, I'm going to give you a nasty look and film you and put you on Instagram. Yeah. Interesting. Okay. All right. That's Celsius. All right. See if I missed any. So I got the gold company. I got Vallejo. Got that. Oh, we got a little super chat. Hearts. That's so cute. That is so cute and delicious. All right. Next, we got NVO rebound play. What is this? What is NVO? Let me see if I can find this real quick. NVO. Novo Nordisk. This company got cooked. Novo Nordisk stock. Okay. All right, let's go ahead. We'll look at the news, look at the company. All right, so we got Novo here. So if we look at the stock, it's down massively, 59.42% in the past year. So this company's getting absolutely cooked. So this is a buy the dip play, bro. Over the past 5 years, it's up 65%. It was doing extremely well, and then something happened in June and July of 2024, and it absolutely collapsed. Oh my God, look at that collapse, dude. Woo, baby. All right, what do they do? They engage in the research and development and distribute pharmaceutical products. Operates in two segments: diabetes and obesity care and rare diseases. The diseases provide product for diabetes. They also provide insulin pens, growth hormone pens, and injection needles. All right, so I saw this article here. Let's look at this. Let's see. Oh my God. Get out of here. Announces reducing workforce. Okay, so it's firing people to try to cut costs. Okay. Let's read the news a little bit. Why is Novo Nordisk stock going down? See, the AI helps me. Novo Nordisk stock is down due to several factors, including a significant drop in expected sales growth of its GLP-1 drugs, intense competition from Eli Lilly's competing medications, the ongoing use of cheaper compounded versions of its drugs, disappointing clinical trial results, and a change in the CEO. They significantly cut its 2025 sales and operating profit growth forecasts. Eli Lilly's Mounjaro and Zepbound provide strong competition. Cheaper compounded. So they have huge competition. They're getting eroded by cheaper competitors and competitors in general. Early clinical trial results show lower than expected weight loss. And the FDA's decision to not cover weight loss drugs under Medicare further reduced accessibility. They're getting hit freaking hard, man. So, to be honest with you, just looking at this right off the bat, this might not necessarily recover. This is not like the meta dip. Okay. This company's having serious freaking competition issues. They're massively getting eroded. And when a company collapses like this, I'm not saying it can't recover, but it's generally for a good reason. I mean, if we go look at the valuation. Okay. PE's low, but that's because they're cutting growth expectations. Price to sales, low as it's been in the past 5 years. Price to books down. Let's see, price to operating cash flow. I mean, what's the recovery play in this? Are they somehow going to fix their issues with their drugs in trial? Are they going to somehow defeat their competitors? Is Medicare going to suddenly start accepting the drugs for weight loss? Like, what's the turnaround? Cash flow. I mean, they had explosive growth from 2020, but now they're really starting to decelerate. Let's look at their income. Yep, I mean, revenue growth's definitely decelerated. That's why the stock went up massively. They were doing extremely well with their drugs and stuff. Let's look at their margins. Extremely profitable business. Good God. Look at those margins. 34%. God. Woo! Mama. So, I mean, overall, the fundamental business, very profitable. Let's look at their assets. They don't really have a lot of debt. Yeah, their debt position's really not that bad. I mean, they're well capitalized and they're sitting pretty good. But just because it dipped doesn't mean it's going to recover. Okay, that's not that doesn't always happen. I'm not saying it could, but they're having serious issues. So if you're going to buy this, I mean, you could buy and hold it. Hopefully, it recovers. It's possible it could, but I'm just not. I personally wouldn't do it. Okay, there's too many concerning things. I mean, do you truly understand the drug market? Do you understand what's going on with all this? Or are you just looking at this and saying, "Oh, it dipped, so I'm going to buy the dip, and then it's going to vertical line again"? I don't know. So, not a big fan, to be perfectly honest with you. All right. Oh, this is going to be a good one. This is going to be a good one. All right. Before we even look at this mutual fund, I will say Peter Schiff is finally having his day in the sun. Okay. Peter Schiff has been saying U.S. stocks are clownish. We're in a bubble. You need to buy gold and international value. That's been his thing. And if you remember, over the past decade or two, hasn't done that well. So now finally we're getting international stocks ripping this year. Big part of which is because of the dollar devaluation. The dollar's been dropping relative to other currencies, which helps boost international earnings as long as you're unhedged, or international stock appreciation as long as you're unhedged. And gold's been absolutely going to the freaking moon. Okay, so Peter Schiff is getting his day in the sun. And part of me agrees with him. Like, I do think we're in a clown market. I think that I see a lot of degeneracy in the United States of America. But that doesn't mean that Peter Schiff is a freaking genius. Everybody has their day in the sun. Even international stocks get their freaking day in the sun. But his mutual funds are freaking expensive. They're insanely expensive. You would have cooked your wealth buying his mutual funds over the past 2 decades versus U.S. stocks, total world, anything. Absolute disaster. And you got to remember, he's a gold shill. Okay. He's motivated. I think he does believe what he says, but he's also, what he says is tainted by his desire to sell. He wants to sell his mutual funds. He wants to sell gold. You have to understand that he's biased. He's very biased. So this is going to be a good one, though. EGPIX. EGPIX. Euro Pacific Gold Fund Class. Euro Pacific Gold Fund. Cooking, man. 17% in the past month. Oh, that's a different one. Hold on. I'm trying to find it on his actual website. Okay, EPGIX. Oh, it's the same fund. It's like different share classes. All right, let's look at it. All right. The EuroPac Gold Fund offers investors a precious metal strategy distinct from other funds in the space by focusing on firms that create the most value. Okay, so he's buying a bunch of gold miners. Gold's going to the moon. The gold miners are probably doing well too. People are probably looking at this now because, oh, it went up, bro. It's going up. Buy it. Buy it. I would not concentrate your portfolio in gold miners, okay? There's a lot of other companies out there. All right, most funds will tend to gravitate to the larger producers of the industry. It will not be substantially different from that other ETFs that are offered at a lower fee. These large producers have a tendency to destroy capital over time. Instead of small producers of gold, most of these small companies are like the company we saw earlier. They're not even generating revenue. I would say the small ones are destroying capital. At least with the larger ones, you kind of get like, they're proven and profitable a lot of times. From the end of 2007 to 2022, the price of physical gold has increased 121%, but the book value per share has only increased 11%. Okay, maybe they've been paying a lot of dividends. I don't know. A fresh approach is needed. Our manager, Adrian Day, has been in the industry for 40 years, and he just buys a bunch of random gold buyers. And his approach to investing is focusing on the royalty business rather than the large producers, as well as his expertise to assess and invest in what he views as the best of the smaller, more nimble exploration and prospect. These are highly speculative. Highly speculative. Anginco Eagle Mines, Fortuna Mining, Wheaton Precious Metals. What is this? Okay, at least they have some diversification, but geez. 87% in Canada, 10% in the US, 1.2% in the British Virgin Islands. Okay. What's the expense ratio? Let's go look at the documents. Okay. Oh, yes. I'm like, what the hell is that's the wrong fund? Gold fund. Okay. What's the expense ratio? What the hell's the expense ratio? Am I blind? Oh, and they have you can put it in your IRA, bro. Let me see if I can find. I don't know why it's so hard to find the freaking expense ratio. Is he hiding it from me? Maybe I missed it, but it seemed kind of hard to find. Okay, Euro Pacific Gold's Class I expense ratio is 1.12%. What a freaking joke. Okay, so you're buying a very look at this. So it's ripping, right? It's absolutely ripping. I think has it beaten the S&P 500? What? Since 2016 or whatever? We're going through a insane bull market in gold, okay? And it could be for a variety of reasons. I'm not necessarily 100% sure why gold is ripping. It could be just the fact that a bunch of central banks and countries are buying gold to kind of get away from dollars. That could be it. Okay. And the trend could continue. There could be other reasons. I'm not quite sure. I'm not a gold expert. But gold doesn't always go up forever. There's a possibility that gold could collapse. And if you're buying smaller gold companies and gold implodes, you're going to get cooked. And the whole time you're paying an expense ratio of 1.12%. This is extremely expensive. Let's see. Hypothetical growth of $10,000. What is up with this chart? This doesn't seem right. Yeah, honestly, it looks like it's outperformed the S&P 500. That is hilarious. Okay. Personally, no, I would run the heck away from this. Just the expense ratio alone is out of this freaking world. Okay. And then you're basically hoping that the gold bull market continues. If the gold bull market does not continue and it collapses, you are going to get annihilated. You are going to get crushed. But if you're a gold bug and you really trust Peter Schiff and you want to give him a ton of money, I mean, over the past 10 years, it looks like he's done pretty well. Okay, I'll give it to him on that. But me personally, I wouldn't touch this with a 10-foot pole. This is extremely risky. Let's see what's Goldman doing. GLD ETF. Yeah, gold's just going ballistic, man. God. Just buy a shiny rock, bro. EPD. Is that what it is? No. Actually, let's look at his other funds real quick. Peter Schiff's having a good year. I'll give him that. Okay. His international dividend funds up 40%. Woo! Wouldn't it be hilarious if his mutual funds just ripped forever? The dude's been torched for a long time as being a clown. Okay. And that's what I don't like about like short-term time horizons is you could be right about something and the stock market doesn't care and it just goes where it freaking goes. But people eventually, if they're right in the long run, they'll eventually get their time in the sun. And it seems like Peter Schiff's doing pretty good job over the past year, at least. So I'll give him that. But personally, no, I would not invest in this at all. Highly speculative, smaller gold mining companies. This thing could collapse if the gold bull market ends. I would not touch this with a 10-foot pole. But hey, if you want to be a momentum bro, I guess you could. Okay. All right. Woo! What the hell is DKK $70? CNC. All right. Well, first of all, I'll see if you grifted me. DKK currency. 70 to USD. Oh, he gave me $11. It's Danish kroners. Okay, well, I guess I'll have to cover your stock then. Would it be a grifter if, let's say somebody gave me like an international super chat and then it was only $9.99. And I'm like, well, you didn't give me $10, so I can't cover it. Sorry. Okay. All right, let's do CNC. Centene Corporation. What is this? What is this? Excuse me. Let me get it ready. All right. Stock analysis. CNC. And then we'll do Centene. Centene Healthcare. Managed Healthcare Solutions. All right. Let me share the screen and let's dive into CNC. Centene Corporation. Over the past year, it's down 54%. Over the past 5 years, it's down 41% and absolutely collapsed. Wow. This kind of reminds me of Novo Nordisk. Centene Corporation operates as a healthcare enterprise that provides programs and services to underinsured and uninsured families and the commercial organizations in the United States. The company operates through 4 segments: Medicare, Medicaid, commercial, and other. Okay. I wonder if this is like, what was another company that was super popular? There's some companies that rely on like subsidies from the government because poor people are mostly getting subsidies from the government. So if the government starts to crack down on healthcare subsidies and, Medicare, Medicaid going after fraud, for example, that could really hurt a company like this because they seem to be making most of their monies from brokies. And most of their revenue is coming from the government. That's a little concerning, especially under the current administration. You don't know what freaking Geodis is going to do. I mean, they definitely, when did it collapse? Was it right around when the big, beautiful bill came into effect? Let's see. When was the big, beautiful bill passed? Signed into law July 4th. How American. Okay, let's see. When did this collapse? Oh, look. It collapsed right when the big, beautiful bill was signed. I wonder if they're having issues with that. Because I'm pretty sure the big, beautiful bill really tightened down on Medicare and Medicaid. What did the big, beautiful bill do for Medicare and Medicaid? I like this AI. This is nice. ChatGPT is going to take over Google, bro. Okay, the big, beautiful bill makes significant cuts to Medicare and Medicaid and imposes new requirements for eligibility. I wonder why this stock sold off. The changes are expected to increase the number of uninsured Americans by 10 million. God. Work requirements. This company might be cooked, man. Yeah, and a lot of immigrants are having like illegal immigrants or whatever can't get are ineligible. Yeah, this company could be in deep crap, man. So I mean, you could look at the past revenue. Let's see. Yeah, they had an explosion in premiums and annuity revenue, but all these past metrics are almost meaningless in my personal opinion. Because with the big, beautiful bill, I mean, literally, like the numbers you're seeing right now are right before the big, beautiful bill was passed. So people are expecting this company to have issues with profits. Yeah, this is risky. I don't know if I would touch this, man. I mean, is there going to be a massive change to Medicare and Medicaid? They just signed the bill. I mean, what new bill is coming through to potentially fix this? This could potentially be a play if the Democrats come back in power and they sweep the House, they sweep the Senate, they sweep the presidency, and they're like, "We're going to fix healthcare. We're going to bring back eligibility for illegal immigrants." Blah, blah, blah. This could potentially have a good time. But until then, like, I don't see what's the catalyst for this thing to recover. Let's see. Why is Centene stock down? Come on, AI. I'm selling Google stock. This decline is primarily due to investor concerns regarding rising medical costs and the looming expiration of enhanced Affordable Care Act subsidies, which could negatively impact the company's margins. No, I would not touch that. And this, I'm not saying it could recover. It could recover, vertical line, but this could potentially, I think this could be more of a play if you think about U.S. politics in the future. So keep your eye on this and consider who might become elected next and what they might do about ACA subsidies. And there could potentially be some recovery with that. The medium to long outlook depends on whether Congress can extend the ACA subsidies. Without an extension, Centene's ACA business, Obamacare, could face further pressure from increased uninsurance rates and higher per member costs as health individuals lead the market. Yeah, no, this is extremely risky. I'd be careful with that one, bro. Interesting. Sorry, I gotta skip. I gotta get through all these freaking super chats. We gotta know. Thank you, good sir. Who's the lucky member? Who's the new lucky member? I only answer member comments and super chats, of course. EQIX. What is this? EQIX stock? Equinix? The heck is this? All right. Let's do stock analysis. Equinix. And then we'll go to their website. Equinix. Next Gen AI Networking. What's this? Is a global infrastructure company that provides data centers, interconnection services, and networking solutions to business worldwide. Oh, data centers. Data centers, bro. All right, let's share the screen. All right. So how's the stock been doing? Year to date, it's down 16%. On the 1 year, it's down 9%. It's up 5% in the past 5 years. Why? What's going on? I thought data centers were all the new rage. Equinix shortens the path to boundless connectivity anywhere in the world. Its digital infrastructure, data center footprint, and interconnected ecosystems empower innovations that enhance our work, life, and planet. Oh, yeah, they're saving the planet, bro. Equinix connects economies, countries, seamless digital experience, and cutting-edge AI quickly, efficiently. The market's definitely not buying in. Industry, a REIT. Is this a REIT? Let's go look at the website. Business are rethinking infrastructure. All products. Explore the full suite of Equinix digital services, co-location productions, data center services. Trust your employment. Data centers, all locations. The world's most expansive and secure data center network. Equinix owns and operates a network of 270 scalable AI-ready data centers strategically located in 75 major metros around the world. 10,000 customers, unmatched uptime, 310 Fortune 500 companies. Okay, so they're pretty diversified. I mean, they have a bunch of revenue from a bunch of different companies. I'm trying to figure out, like, do they just own the land? Is Equinix a REIT? Yes, Equinix is a REIT that operates data centers, providing the infrastructure for digital business to connect. The company has publicly stated that it operates as a REIT. Okay, it's a REIT. So when it comes to REITs, I mean, you gotta with a REIT, it's more of like an interest rate play. I mean, REITs have been getting absolutely cooked. Like if you look at REIT returns, 5% year to date, down 6% in the past year, only up 15%. REITs are having a hard time, generally because of higher interest rates, number one. And then a lot of cities, when they locked down during the pandemic, they really cooked a lot of commercial real estate because a lot of businesses went remote. So a lot of commercial REIT providers, they were cooked. So there's a problem in that market. The whole real estate market's kind of distorted and clownish right now. So REITs are really struggling. And if this thing is moving with the REIT market, I don't know why you'd buy this individually instead of just buying a REIT. I mean, this has underperformed the total REIT market, the Vanguard REIT ETF. So I guess their appeal is, oh, well, they're leasing data centers. So they're providing land and infrastructure for data centers. So that's really good because data centers are already the hot rage. Well, even if a company's leasing a data center, they're just paying rent. So it's just like any other real estate investment trust. So it's probably high quality. If a bunch of Fortune 500 companies are using it, it's probably high quality. Might not go bankrupt, but that doesn't mean the stock's going to rip because they're associated with data centers, if that makes sense. So I don't know why you'd buy this if you could just buy a freaking the V&Q ETF. I mean, it's literally outperformed. You could have exposure to all the REITs, not just data center REITs or data center properties, and at least historically have outperformed, and you're taking on a lot less risk. You know, if there's ever like an AI bubble problem, and if the AI is a bubble and it pops, this company might actually be cooked. It might be in trouble. Because if you don't need all these data centers anymore, maybe you stop leasing them and you have a hard time finding clients. Whereas if you have total exposure to all the different real estate investment trusts for everything, you're taking a lot less risk. So I don't know, man. I think, oh, it's data centers, bro. I mean, they've been doing pretty well historically, you know, and they could continue to do that. I don't think they're going to have any issues if they're leasing data center property. But I would just, I don't know why you wouldn't just buy the freaking V&Q ETF. I mean, let's see, like max. I mean, the returns seem to be pretty similar with a lot less risk. So honestly, not a fan of that one. I'll be perfectly honest. I could be missing something, but all right. IEMG ETF. I own this and hate it. Interesting comment. Okay, let's see. IEMG ETF. iShares Core MSCI Emerging Markets ETF. All right, let me pull up the prospectus information. All right. So here's what I'll say about emerging markets. They're extremely volatile and they're mostly concentrated in China, India, and India. That's my suspicion with this. China's gotten its cheeks clapped in the past 5 years. So that would massively weigh down the returns. And in India, India's done better, but there's a lot of fraud in India. I don't really trust India, perfectly honest. So if you want exposure to emerging markets, they're very low weighted in the total world index. If you look at China in the total world index, VT, it's like 3%. 3%. China is the second largest economy in the world. It has a bunch of AI companies that are competing with the United States, but they're only 3% of the global market cap. Why is that? Because the market's pricing in a lot of risk with China. Do I agree with that? No, I don't, but that's just what the market's doing. So if you're buying this individually and you're weighting it heavily in your portfolio, it's actually kind of degenerate because you're massively overweighting something compared to the market as a whole. But with emerging markets, they either collapse or they rip. That's what it looks like if you look at the chart. Let's go look at the chart, actually. Emerging markets are very volatile. I mean, look at this. Look at this. Collapse, rip. Collapse, rip. Collapse, rip. So if you were more of a trader, you could potentially emerging markets collapsed. Are they going to zero? I don't think so. I'm going to buy the dip and maybe I'll get a rip in the future. But over time, at least historically, they've had this oscillating effect, which if you had just bought and held at one point, you're probably not going to have good returns. The best thing to do with EM, in my opinion, with any index, is to dollar cost average. Because if you're dollar cost averaging, you're going to be getting shares really cheap when the market collapses, and you'll make a lot of money from the rips. But obviously, you'll buy some shares when they're at the top, and then it'll collapse. Okay. So emerging markets has been flat, but you could probably have much higher returns had you dollar cost averaged. So personally, would I buy this ETF individually? No, I wouldn't. It's already in VT, and it's weighted according to the risk that the market is factoring in. Whereas if you're buying this individually, you're just complicating your portfolio. All right. Expense ratio of 0.09%. Large, mid, and small cap emerging markets. Equities. I mean, this year it's going to be ripping probably because international's been doing pretty well. Number of holdings, 2,686. Yields, irrelevant. Very low fees. What do they have here? Taiwan Semiconductor, Tencent. So it's Taiwan, China, Samsung. All right. I think that's Korean. That could be. I forgot. Okay. China, Taiwan. It's basically Asia. It's like emerging markets. Let's look at the holdings. What do they have it broken down by? Here it is. Geography. Okay, 28%. So China is 3% roughly of the global market cap. This fund has China at 28%. Heavily overweighted. Taiwan, 19%. India, 17%. South Korea, 11%. Brazil, South Africa, Saudi Arabia, Mexico. Yeah, so it's very heavily weighted towards China or China offshoots and India. That's basically more than half of the portfolio. So, yeah, this thing is lagged because China has gotten their cheeks clapped. Okay, now could China rip? Yes, I think it could, potentially. But it could also collapse. You don't know. So me personally, I don't think you need this ETF individually. I think if you buy the VT ETF, you have total market exposure. Total market exposure. And it's priced exactly where it should be based on the market's assessment of the risk of these different regions. Okay. Emerging markets have historically done very well, though, depending on the time period. I think from 2000 to 2010, they absolutely clapped U.S. stocks. But you have to be patient and you have to hold them for a long time, dollar cost average, and hopefully the cycle of oscillating performance continues into the future. But I personally don't think you need this ETF individually. That's just my humble opinion. But if you do keep it, just dollar cost average and hold. That's the only thing I can say. And I wouldn't have this as a huge part of your portfolio because you're inherently gambling. You're massively overweighting countries that are lowly weighted as a percentage of global market cap, which is risky. All right. So that's that. I mean, the ETF itself, it's cheap. It gives you good broad diversification. It's not a bad ETF as ETFs come. It's not a ripoff when it comes to fees, but you got to be very patient with this and be prepared for massive volatility. All right. Let's see. Second payment for IMEG. This ETF is killing me. I mean, I'm not going to tell you what to do, but I personally don't think you need to own it. Woo! Cruise. I have a friend all in the Chipotle of Japan in sushi. Thinks it will translate just the same in the US. Okay, let's go look at Cruise. Cruise! Cruise, my caboose. Cruise stock. Kura Sushi USA. Up 57% in the last 6 months. 18% year to date, 3% the last year. This thing's all, look at this thing. It's all over the freaking place. 448% in the, okay, so it's beating the market over the past 5 years. Okay, so it's very volatile. Jesus. Curious. Let's go to the website. I want to see what they actually do. Revolving sushi bar. Wow. Sushi. Okay. Oh. Whoa. Oh, I'm spraying some what is this? Okay, so they make sushi and they have kind of like this cool concept with a revolving sushi bar. I don't even know what to say about this one. Like, how do you really know what sushi bar is going to outperform and what's not? It's basically like a gimmick. It's like, oh, we have this revolving thing and you can grab your sushi out of it, bro. There's like 1 billion sushi bars in the United States of America. Well, what's special about this company? The Kura experience. Our dishes adhere to the Japanese virtue of serving natural and healthy meals. Always fresh. How much does this cost? The menu. Let's go look at the menu. They even give us the price. How much does Kura sushi cost? Kura Sushi charges for each plate on their conveyor. With prices varying by plate, $3.50 to $4. How many sushis are on the plate? Kura sushi plate. Hold on a minute. You're saying one of these plates costs between $3.50 and $4. Are you smoking something special? What a grift. I would never go to somewhere like this. Well, look at this. $4 for this. What a grift. Oh my God, International Sushi Day. Let's get grifted. What? I actually went to a Asian buffet yesterday, and they had sushi there, and I paid one price, and I got a bunch of meat, and I ate a lot of meat and fried rice, and I got sushi. Oh, what kind of clown goes here? And how is this like Chipotle? Is that what you said? Chipotle? Hold on a minute. Chipotle of Japan. How is this like Chipotle? Chipotle, you go in, they make your food, and then you leave. Like, it's like a assembly line. I mean, I guess it's there. I guess there's a conveyor belt, so I guess it's kind of an assembly line. I don't know. What? I mean, we go look at the financials real quick, but what a joke. Only some rich moron would go to a company like this. Cruise Sushi. All right, let's look at the financials. All right, good revenue growth. I'll give them that. Their gross margin 16%. They're charging $4 for a plate of fish with 2 little sushis on it, and you're telling me their gross margin is 16%? And they've been losing money? They have negative operating margins? They don't even make freaking money. What is this? Look at the share dilution. Screw this company. No. Bro, I'm going to pay $4 for 2 sushis. Mr. Seymour Duck Cover Corp, Japanese company. What is Cover Corp? How many more super chats do we have? All right, I think this is going to be the last one, guys. So if you're playing into super chat, I need to eat freaking lunch. So hold off on that. Maybe I'll do another video tonight. But all right, Cover Corp, a Japanese company. Let's go look at Cover Corp. Cover Corp. Cover Corporation. All right. Cover Corporation, Japan. Together, let's create culture loved by all. We're continuing to build a platform to bring together unique and diverse content creators with dazzling abilities while providing a stage for them to perform to their fullest. Oh, like YouTube? We create brand new experiences of the highest quality. What is this? Fans, creators, investors, and companies. Our goal is to work together with everyone involved to promote 2D entertainment culture originating in Japan. What are they making, like Paper Mario? Okay. We established our company with the aim of bringing about a future where everyone can communicate through games, concerts. Since September 2017, when our first VTuber debuted, VTubers have become a household name. I've never heard of a VTuber before. What is a VTuber? A VTuber is an online entertainer who uses a computer-generated virtual avatar instead of their real face to create content, such as live streams. What is this? Oh, so I want to look at Ash Ketchum's face as he talks about stocks. Okay. Where are VTubers streamed? VTuber streaming platforms, most dominant are YouTube and Twitch. All right, hold on a minute. I'm trying to understand what this company actually freaking does. VTuber production, an agency that produces VTubers. What do they have? They have an agency that trains VTubers? Media Mix offers intellectual property for VTubers through planning and development of merchandise. And Metaverse develops Hollow Earth, focused on the sandbox games that allow users to act freely in a virtual space. Okay, so I wonder, they not have a hosting platform? It's more of like a VTuber generator. So if I want to be a VTuber, I go to them. All right, so the stock is up 17% in the past 5 years. Let's look at the financials. Revenue's all over the place. Gross profit, pretty solid gross profit. Kind of, they're getting cut on operating profits, though. Okay, so revenue's kind of oscillating all over the place. And the gross profit is maintained. It's pretty decent gross profits, but their operating margin has definitely been getting hit. Let's go look at the website a little bit more. Cover Corp. This is weird. I don't understand the Japanese anime culture thing. Let's look at the news. Yeah, this is not my subculture. I don't understand this. Let's look at the business. Okay, virtual talents attract fans around the world through video streaming and concerts. Oh, look at this. Wait a minute. Is this a real concert with fake anime characters dancing? Or is this just all anime? What is this? The spark that ignited the worldwide phenomenon, a VTuber agency that offers expiring experiences. We operate the VTuber agency HoloLive Production, which boasts one of the world's largest number of channel subscribers. Media Mix, much loved intellectual property in the form of content that maximizes the appeal of VTubers. Metaverse. Okay, it's very weird. It just seems like it's not. It just doesn't appeal to me. Like, if I want to go to a concert, I want to see real freaking people, not some anime Japanese girl dancing on a stream. If I'm going to watch a YouTube channel, I want to see a human being talking, not "Hello, I'm Japanese." I don't want to see that. What is this? It's freaking weird. But yeah, I mean, their revenue's all over the place and their profits are. I don't know how to value this company. It's weird, man. Very freaking weird. So, yeah. All right. Yeah, VTubers is popular in Japan. Let's see. All right, I'll do a couple member comments, then I'm going to shut this down. Wow, that was pretty successful. Look at this. We got 10, 24, 34, 44, 54, 56, 66, 76, 86, 86, 91, 101, 111, 113, 123, 130. Dang! Dang! Daddy made money. I might have to do this once a week. This is awesome. Man, I just printed some Tindy. This is the life of a YouTuber. Why do I need a freaking job when I can just make clownish videos? Okay. This is a good grift. This is what happened when you're in an echo chamber like Cashflow Kings. Strongman is self-serving. Sony could be a good one to invest in. They own Crunchyroll Animation Studios. Okay. Interesting. All right. Well, I apologize. I skipped some member comments, but this was a very, I actually got more super chats than I expected. So I thought it was just going to be a couple, but I kind of like this concept. Do you guys like this? And you can still do sponsored videos. I go in a lot more detail, but this has been pretty good. I like this. All right. Well, thank you for tuning in. I'm going to have some lunch and then maybe I'll do some videos later, but I guess I'll have to go get something out to eat, maybe, because I made so much money. Or maybe I should be frugal and save. I don't know. All right, guys. Anyway, like, subscribe, consider joining as a member. Thank you very much. And you guys have a wonderful, delicious day.